Hello and welcome to another ACY Securities Market Review. My name is Alistair Schultz and I'm going to be your host through today's trading journey. Now, there has been a lot of news in the last week and I'm going to start off as always with a virus update. We're now looking at 325,000 cases plus worldwide with more than 14,000 deaths that have occurred so far. Now, we've also seen global cases dramatically increase with the peak figure at 32,000 over the weekend just gone for a single day of new case infections. We've also seen the dramatic turn on the curves that come along with the virus updates themselves and what the deaths look like and what the cases are as a plotted graph. So if you wanted to have a little bit of a look, I got the source of these from Worldometer. They have some really good data on how it is affecting price and what is really going on in the scheme of things. Now, beyond that, we've also got a serious amount of travel bans and restrictions going on. Australia has shut its borders, New Zealand has shut its borders, a variety of other states. The border between Canada and the US has been shut for everything but necessary travel. So expect to see more of this going on in the next coming weeks. We are entering lockdown here in Australia, and as such, we'll be actually reporting as of tomorrow from different locations as opposed to seeing them from the studio. So you'll have some exciting news to look forward to about what may be going on at any time in the future. Now, to have a bit of a perspective of it, I have put a chart up of the S&P 500. And you can see where prices moved. This morning we've hit a limit down yet again, bringing the total to over 3 or 4 now. So in the past week. So we're now looking at the idea here that price on this chart behind me and how far it's actually traveled compared to the other pink line being 2008 and how far it's really moved in comparison. Now, from a percentage standpoint, 2008 has moved more because we had lower prices back then. But if you put it in a pip value or point value, you can see actually how far it's really moved, and it is quite impressive to say the least. I've never seen anything like it before in my life trading, and I have more than 15 years trading experience so far. Now, putting into addition to that, the Nasdaq has done the same thing in comparison to the dot-com bubble in the 1990s and 2000s. You can see how far prices moved, and this is all done in just a matter of 2 months, as opposed to the 3-year period we saw for the dot-com crisis. Now, moving on from that, the Australian dollar, one of our recent videos, I said that we would see price come down to the 55-cent range, and I drew a trend line for us to have a look at, or a support line, and price has hit smack on it. It's popped through it, come back, and it is now resting on that support line. If price is to go through this, I don't know where it's really going to go, because there is not much in the way that's going to stop it from a technical perspective. We're really going to be relying on seeing the fundamental side to see where the economy is going to bounce back or not. Now, from there, we also have oil. WTI crude oil has dropped below $20 at least once in the past few days, and it is also at the lowest point that we have seen since 2004, potentially even earlier than that. So it is looking like it could go further down at this stage, and there are reports potentially for having it go below zero. Now, what does oil look like in a below zero condition? Well, the idea behind that, and how is it even possible, is really that if they have so much supply of oil and they're paying for storage of this oil, then they may electively basically give away oil or even pay you to take oil off their hands so they can reduce the storage costs. So we're not near that just yet, but it is a worst case scenario for the price of oil. And considering that we're right now seeing, on top of the coronavirus, the more positive side of things being, the green side or the ecologically friendly side of things improving dramatically, then we may actually see a push after the coronavirus for more energy efficient cars that don't use fossil fuels, and vice versa, other modes of transportation, which may see some more declines in oil prices as technology erupts. Now, obviously, that's not going to be an overnight thing. We're not going to see that happen straight away as soon as coronavirus woes have ended, and as soon as we see the idea of potential recessions end and we're back in a growth phase of the market, but it is something that could be a scenario in the future. Now, We've also got the ASX to look at, and you can see just how far this has moved already. Now, in the previous drop down that you can see, it is 2008, that big move there. But that's, again, happened over an entire year and a little bit more. And we've just done nearly half of it, if not over, in the past 2 months. So we are seeing some incredible volatility. We are seeing some incredible moves down, and we are seeing plenty of good trading opportunities along the way as well. Now, the Dow Jones has done the same thing. I'm not going to cover over the idea of being a 2008 or not because it speaks for itself, especially after the last charts I've just looked at for you all. Now, from here, I have the news that happened last week. We always have a look at what's going on a Monday, and today is no different. And just to put it into perspective, you can see how much news has impacted price throughout the week. All of these are high event categories. They are giving much more volatility at the time, so they're having a large impact. But not only that, the news itself is stuff like stock futures hitting limit downs and circuit breakers. We're seeing central banks doing rate cuts, quantitative easing, and they are doing it all within close proximity to one another. So there is a lot there to have a look at. I don't think we'll be able to cover it all just in today's video, but if you want to take a pause for a moment and zoom in on the chart, you'll be able to see just how much action's happening. Now from here, we'll have also just this morning, have also had stocks, US stocks on limit down right at market open. The ASX has dumped 8% just this morning within the first 15 minutes. So we're expecting it to be a very volatile trading week ahead with some really good movements to happen. Now, beyond that, we've also had some more forecasts coming for the US economy. Treasury Secretary Steve Mnuchin has said that he is expecting an unemployment rate of approximately 24%. Fed James Bullard, who is the president of the St. Louis Federal Reserve, has said a 30% unemployment rate is what his expectations are. Morgan Stanley have said that they are expecting 30% contraction on second quarter GDP figures. We've also had Goldman Sachs say 24% for those GDP figures as a contraction. So things are not looking good right now for economies as a whole, not just in the US, but globally. Now, some of the stuff that's coming with that is that there are people talking about the comparison. Data is coming out that looks very, very, very similar to what we saw during 1929's depression. Now, we've had 10-year Treasury bonds inversions. We've now, for the first time ever, had 30-year Treasury bonds invert as well. We're seeing those 10-year Treasuries invert across the globe, Australia and New Zealand included. We've had business activities stopping with lockdowns, synchronized shutdowns across the globe. Forecast is going to be the worst quarter we've seen since 1947 for the next one, not including the ones after that, just the very next one. We've also had coronavirus layoffs. People are losing their jobs because people are losing their businesses. We've also had central bank cuts, quantitative easing, stock market circuit breakers, and closures if you look at the Philippines. So there has been a lot going on, and it is possibly going to push us beyond the scope of recession, and it could be a long-term event, also known as a depression. So keep yourselves in check while you're trading this week and make sure you are being as risk averse as you can whilst taking the best trades that you can to maximize that profit. Now, news for the week, and we are covering that news for this entire week with the idea on what I see as being high impact events. Now, today at 11:30 p.m, we have Canadian wholesales coming out, so keep an eye on what's happening there. May be impacting Canadian dollar, could also impact the US dollar, purely because the border has been shut down. Trade is likely to continue between the US and Canada, but that's only for the moment. So let's see what happens there. I imagine a lot of the numbers that are going to come out this week are likely to be negative. Tomorrow, we have French PMI, German PMI, and UK PMI. Now, Purchasing Managers Index are an important representation of how businesses are really doing. So keep an eye on those. I imagine the numbers are, again, going to be negative. We have on Wednesday at 12:45 a.m. US PMI following on from today's PMI rating, Tuesday's PMI ratings. And we've also got later in the evening German IFO, UK Consumer Price Index, and US goods orders. So they're the three that I see that you should be looking at during the day on Wednesday. Now, from there, we've got Thursday naturally, 8:30 p.m. UK retail sales. At 11 p.m, and this is going to be a big one, the Bank of England is delivering monetary policy summaries. They're releasing the votes on whether they're going to be cutting rates or not, but the most important one on that list is the bank rate itself. Now, it is plausible that we see a bank rate cut, at least as a secondary. Now, naturally, they are already tipping the verge of scales, so it will be something to keep an eye on, especially if you're trading the pound. But regardless of that, it may also affect the euro. We've also seen at 11:30 p.m. US unemployment claims. Now, this could be the first set of indicators that we've had since mass lockdowns such as in New York have occurred. So I'm also expecting to be a large number of unemployment claims increasing on this one. Friday, we have at 1:30 a.m. US natural gas storage figures. I don't know where to sit on this one. If you are trading futures markets, then you might have a better idea than me, but they are going out of winter in the US, so you could expect that those numbers are going to fall as well from a sort of seasonal ideology behind it. And of course, we have US personal spending. Now, that is meant to be a medium impact figure, but I think we might see some interesting stuff around it. Now, talking about what's going on here at ACY Securities, we're going to be respecting what's going on in Australia, and the New South Wales is locking down non-essential business services to try and protect our staff and ourselves. So, all services will be continuing as per normal. I will still be promoting videos and making them for you on a daily basis and possibly a couple of times throughout the day. However, the format will change a little bit. I'm going to try and do it with minimal impact to you guys, so the information stays the same, except the only difference might be that you see the lockdown edition or the home edition instead. But either way, I'll be bringing you the exact same content that I always do. Now, if you have any questions about anything that I've covered today, perhaps there's something to look at a little bit more in depth about maybe some of the news that we've not covered or have covered, and or the events in price, feel free to send me a message at talk2al@acy.com. And of course, like and subscribe the video so you can get more great content from me and ACY Securities in the future. Have a great trading day ahead.